Looking at the FX space, we're going to start off by looking, as we always do, with euro dollar. Very interesting market, and certainly we saw this big move higher on Friday and last week as a whole, which really was more to do, I would say, with the fact that we've seen this US dollar weakness. But given the fact that we didn't necessarily see the same kind of upside in cable, certainly there's a big story in terms of euro strength as well, and that certainly shows through if you look at euro sterling. So this is, we just make that a little bit clearer, this is euro dollar, and you can see here that crucially we've been talking about this wider move here and the creation of lower highs on these sort of wider moves, not necessarily on an intraday basis. Now we have negated that with the break up above 111.65. You can see that currently we're pulling back. This looks like something similar to what we saw here. Looks a lot like some sort of flag or pennant. If we get on the hourly, we can see it a little bit more clearly. So you can see here that essentially you've got a potential pennant formation where we've broke below the bottom of this, but finding support back on that 111.59 level. As such, you'd be probably looking for a sort of break up above one of these sort of swing highs, 111.82, 111.89. If we get a close up above there, that largely negates this downward break. Otherwise, unless that happens, there is a chance that we could start to drift lower once more. You'll be looking at the Fibonacci levels 111.48, 111.33, 111.18 and 111.099 as key support levels. But ultimately, the direction of this market has been set for the time being, and certainly the short term this looks bullish. It's just waiting for the next leg higher. There is the potential for a deeper retracement, and as such, if you break up above one of these sort of smaller swing highs, then that would be a good signal that actually this retracement is over and we're likely to see another big move higher in terms of euro dollar. Now, if we look at this wider perspective, you can see certainly we are seeing a rally, but this would be a retracement of this wider downturn, and as such we want to get that fib on. If we can get it, if we get that fib on and see exactly how, okay, I just moved it, get the fib on, exactly how it pans out on a 76.4 basis, 11306. That is potential. The key here is this level here, 111.86, absolutely massive level. You can see today that has largely marked the top. So if we manage to break up above 111.86, that should give us confidence that we're going to see a more protracted retracement. And certainly if we come into a 113.06, that could be a good area for us to reverse lower. But certainly watch it on the short term, see how it plays out. I wouldn't necessarily say that I'm bullish or bearish right now for the short term, but the medium term picture, or certainly over the next week, it's looking a little bit more bullish. Now, looking at what's happening in terms of cable, this is the daily time frame. You can see that we have seen a little bit of a recovery of late last week. 3 of the 5 days ended in the green. If we look in terms of the 4-hour chart, we can see that we have seen sort of trickling along in terms of this market. We haven't necessarily seen a massive amount of conviction in terms of rally, certainly not when compared to what is happening in terms of euro dollar. We did see a tentative break up above 132.89, but it sold off from that. Now what we're seeing at the moment is a lower high being posted here, and then let me just get rid of this alert that I set myself for when this happened. So we posted that failure swing with the lower high, and then we broke below this 132 mark, and that means that we're now posting lower highs, lower lows on an intraday basis. Certainly looks like we're posting right now a doji candle. The potential is for us to see some sort of retracement, but this looks like we're actually moving back towards the downside. It looks like the downtrend is going to be coming back into play, and certainly that's how I prefer it. I've got a BOE on Thursday. Market expectations, 100% chance of a rate cut. People are looking to get into this in advance. That's what I believe. I think people are going to be selling the pound in advance of this announcement. Certainly, we've seen this rally off the back of that US dollar weakness, but I do think we're likely to see further downside. So I am happy to be short of sterling this week, and certainly this signal here, failure swing alongside the break of the neckline. You could call it a double top formation, call it whatever you want. I think this is cable starting to reverse as we see weakness in the lead up to this Bank of England decision. Finally, looking at what's happening over in Japan, we can see that we've seen a big deterioration. Now last week saw that Bank of Japan decision to, well, largely not do too much, and that sent the yen rocketing, which sent, of course, an inverse dollar yen heavily lower. Now we saw that big move lower on Friday. We are sort of pushing on from there. Certainly if I take it back to the hourly time frames, the 2 hour, we have seen a short, very short retracement, and then what looks like a little double top formation. If we go on to say the 15-minute chart, it should give it a little bit more clarity. You can see this little double top. We've broken that neckline 102.30. So that gives me a little bit more confidence that actually we're going to sell off from here and that this retracement is largely over. So as long as we remain below this 102.70 mark, even if we saw a rally, I think it would largely sell off once more. I do think that this retracement is over, and I think we're going to see further downside for dollar yen to come.